Hey everyone, so today, let's talk about something really important: term insurance. I know insurance might not sound exciting, but trust me, if you have people who depend on you, like your parents, spouse, or kids, this is something you absolutely need to know. Now, term insurance is the simplest and purest form of life insurance. You pay a small premium every year, and if something happens to you during the policy term, your family gets a large amount, called the sum assured. No returns, no frills, just protection. But here's the thing, not all term plans are the same. So before you buy one, there are a few key points you really need to look at. First, and probably the most important, is the coverage amount. How much insurance do you actually need? A good rule of thumb is to get coverage that is about 15 to 20 times your annual income. So, if you earn Rs 10 lakhs a year, aim for Rs 1.5 to Rs 2 crores of cover. This might sound like a lot, but think about it. Your family will need that money to manage daily expenses, pay off any loans, and continue long-term goals like children's education or a home purchase. So don't underinsure. Second, choose the right policy term. That means till what age you want to be covered. Ideally, your term insurance should last until your retirement, say age 60 or 65. There's no point taking a policy for just 15-20 years if your financial responsibilities last longer. Think long-term here. Now, many people just look at the premium and go for the cheapest plan. But wait, price isn't everything. You also need to check the insurer's claim settlement ratio, or CSR. This tells you how many claims the company has actually paid out. Look for companies with a CSR of 95% or above. Because what's the point of buying a plan if your family struggles to get the money when they need it the most? Another thing to consider is whether you need riders. Riders are like add-ons that give you extra protection. For example, an accidental death rider gives more money if death is due to an accident. A critical illness rider pays out if you're diagnosed with a major illness like cancer or a heart attack. There's even a waiver of premium rider, which means you don't have to pay future premiums if you become disabled. But remember, only pick riders if they actually suit your life situation. Don't just add everything because it sounds nice. Now, this part is really important. Always be honest while filling out your application. Don't hide your smoking habits, existing health issues, or any past medical history. If you do, and something happens later, the company can reject the claim. So be transparent. It's in your family's best interest. Also, if you're still young and healthy, this is the best time to buy a term plan. The younger you are, the lower the premium. So if you're in your 20s or early 30s, don't wait. A delay of just a few years can make your premium cost double or even triple. And finally, a quick but important reminder: never mix insurance with investment. Term insurance is for protection. That's it. Don't fall for plans that offer returns or money back. Those plans usually give poor returns and high premiums. If you want to invest, go for mutual funds, PPF or FD. Let your term plan just do one job: protect your life. So to wrap it all up, get enough cover, pick the right term, don't just chase cheap premiums, check the claim record, be honest, buy early, and keep insurance and investment separate. That's it. If you found this helpful, give this video a like, share it with your friends, and hit that subscribe button for more no-nonsense money talk. Thanks for watching. Stay safe, stay financially smart.